Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, that makes sense. I think we're going to take questions 6 and 7 together, and I'm going to stick with Raghee, and then we'll go to Ilian. So, exit and entry, I guess, it's the idea of stop-loss orders. I think we talked a little bit about getting in, but Raghee, talk about, having a bad trade or having a profitable trade and exiting. I think that's something that a lot of investors need to think about. Also, your views on trading, let's say, YUK, which is, of course, dollar yen, ICFX options versus trading Google or IBM or anything else. Do you feel there are any differences there?
Well, obviously the underlying fundamentals, as Ilian said, I think we all, whether we're chartists, and I'm a chartist, but I think any chartist that would ignore the underlying fundamentals is going to be missing out on the psychology of the market. I may not be looking for the fundamentals to trigger my trade, but I know they're gonna obviously shade it a lot, and I'm looking for the price confirmation of that fundamental story. I think we all do that, whether we consciously know it or not, because in the back of our minds we do have some sort of fundamental story or bias we might be dealing with. But in terms of exits and entries, for me, an entry is always going to be guided by the current market cycle, and that's what I keep coming back to, which is why that first question you posed to me was perfect, because to me, I shouldn't even be considering entering a market until I can accurately and confidently analyze what I feel it's doing, up, down, or sideways, and to what degree it's doing it. Is this a long-term congestion? Is this a long-term uptrend? Is it a brand new, fresh transitional uptrend or downtrend? So I have to identify the market cycle, and again, I use those 3 exponential 34-period moving averages to do it visually. Once I know... I'm sorry,
Raghee.
No, go ahead.
So looking at dollar-euro, I don't have the moving averages here. I don't have access to that.
Okay.
I assume, though, that you'd be looking to enter as a long at some point. If you're not in it now, EUI, that would be, you wouldn't be looking to be shorting this kind of asset, depending on, it doesn't really matter what it is, but EUI, you'd probably be looking for it to come back a bit and then look for another springboard?
That's exactly right. In fact, right now, if someone were to look at, say, a 240 or 4-hour EUI, we're actually getting a little bit of that pullback right now. And as far as the daily chart of the EUI, which, thank you put that up there for me, that's exactly right. I'm looking for a little bit of a pullback on that daily EUI. And with the context of a trend, I think this is the heart of trend following. There's been so many books written over the past year or two where turtles and trend following are really coming back into vogue again, and which is great. But I think any trend trader, their first job is to understand which tools and how they're going to identify a trend. So with that in mind, to me, this is a trend. I've got the upward angle I'm looking for, and then within the context of a trend, it's my job to buy those pullbacks and engage the long as that trend is intact.
Makes sense. That makes a lot of sense. Ilian, can you elaborate on, I guess more of the exit? We talked about the entry point, and also your, differences from, let's say, trading equities. I know that you really concentrate on FX, but, do you think there are any differences there? So, and then I have I could pull any of the charts up if you want to use an example, but please.
Even when I traded equities, I was actually a pro trader at a proprietary trading firm. We were members of the Pacific Exchange a few years ago. And I traded mostly equities there. I still was sort of utilizing my course theory as a basis for my trading strategies there. In particular, the options prices there. As you know, if a stock is below $30 per share, the options prices are placed in 2.5 cents increments, right?
Great. 2.5, yep.
So about $2.50, yeah. So I would look for, the progression along these $2.50 ranges, and basically if we get an unsuccessful move from one point to the next, or one strike price to the next, then I would look for an opportunity to either get out of the trade or basically take advantage of the reversal that may happen. And the beauty is that the reversal normally, especially with currencies, in a spot FX, and that's why I've switched more towards currencies, because my quarters theory does work perfectly when you apply it to exchange rates and their fluctuations. The move that happens is usually a move towards the familiar price points which is the preceding large quarter point. So that's a very helpful way for me to recognize these reversals. Exit strategies as far as stops and entry points and limits, take profits, I always have them predetermined before I even, take the trade. I basically do a little bit of a game plan analysis as far as whether or not the price point that I'm choosing for a profit target is a realistic price point. And if it does make sense from the realistic price target in a range of amount of pips that I'm going to be able to accomplish, I then work on establishing a realistic stop as well. So I have all these three price points predetermined before I even go and actually place the actual trade in my broker's platform.
Wow,
I
that
will
makes
have
sense.
an entry price, a take profit target, and a stop established at the same time.
You like FX because it's just less volatile, which it really lends more towards your quarters theory. Is that correct?
Well, it's a little bit.
Volatility is a lot lower here than trading an equity, of course.
Yeah, you get a lot more bang for your buck, and like I said, the beauty is that I have the so-called 3-day rule of my quarters theory. I allow a major currency pair to complete a quarter or a range of 250 pips in no more than 3 days, and if it doesn't complete it in 3 days, I don't bend the rule. I basically think about an exit.
Correct. Oh, wow. Makes sense. All right, let's go to the next. How would you both, in fact, I guess I'll start with Ilian. That way we'll stay consistent. How do you think about building that plan that you have, this trading plan that you have now? How did you get today where, you started many, many years ago? How did you start building the plan? And could you just give us some insight for those of us that are new to trading, or some of us that maybe have been trading a while but maybe trading equity options, how they can actually think about it in the world of foreign exchange, building this trading plan? Ilian, and then Raghee, I'll have you go next. Ilian?
Steve, a lot of people who used to listen to my broadcasts, 3 years ago or so, would always laugh and say, why in the world are you preparing for 2 scenarios? Why do you always talk about 2 scenarios? I mean, people would say, this is kind of like being a meteorologist and basically saying, today it's either going to rain or it's not going to rain, And my explanation of that would be that fear is something that we're programmed to react with fear to developments that we're not familiar with, we're not prepared for. And to me, it all starts with a preparation of both of these scenarios. If it was to go up, a particular currency pair, then what would it do? What are the price points that it's going to hit? What is going to be the catalyst for that move? How am I going to take advantage of it? How am I going to set up my entry price, my limit, my take profit, and my stop at the same time? On the other hand, I would also prepare for, what if I was wrong and the move was not what I'm expecting it to be, but rather it's the complete opposite move? And then I prepare for the second scenario.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.